All right, Bulls and Bears back with another dose of economic reality. Out in front of the cornfield today. This kind of reminds me where I grew up. I had corn. We grew up on a farm. I grew up on a farm in Michigan before moving to California. Farming was kind of dwindling when I was graduating and stuff like that. Thought I'd take a different career path. So ended up out here in California, not really able to buy a farm, that's for sure, the way land prices are in California. But back in Michigan, this was kind of our place. We had corn. We had an old tractor like that. My dad had a couple different tractors, a John Deere and one's International. It was like a red one. We grew pumpkins. We had goats. We had rabbits. We had cows. We had horses. Anyways, just thought I'd pick that background. It's October. It's the fall, my favorite time of year. The weather's cooling off here in San Diego. I love this time of year, my favorite time of year. It's interesting because August and September were pretty hot here, and I'm a little bit inland in San Diego. I'm not on the coast, so we get into the 90s and touched 100 a few times, 100 degrees. Nothing as bad as Arizona, of course. I'm not complaining. I'm just saying it's a little bit hot, but now it's been in the 70s, 80s. It's been really, really nice. Anyways, I love the fall, but we got a lot to get into today, folks. Another interesting video, and things are just, I don't know what the word is. Interesting, weird, just such a weird time, weird economy right now. And what I mean is prices are still high, but we've got people everywhere complaining about how expensive everything is and how unaffordable things are. Well, usually when things are unaffordable, prices start coming down because people can't buy it. But what we're seeing now is people still buying things that are unaffordable, if that even makes sense. Does it even make sense anymore? Everything's unaffordable, but people still keep buying it because they're still able to borrow money. We're going to show you some crazy videos on some car payments that people are making. But before we get into that, let's look at what car prices are doing here. We just set another record, I believe. Take a look at this. And here's how they put it over at CNBC. K-shaped cars. New vehicle prices top 50,000 for the first time, while delinquencies keep rising. Doesn't make much sense, does it? If delinquencies are rising, how are prices still rising? Because you would think when delinquencies are rising, it would be tougher to get a loan because banks would be concerned about it. But it seems like banks are not concerned about it. They're still giving out loans, huge loans, and you're going to see some huge loans here in just a moment. The Cox Automotive reported the average price for a new vehicle last month topped 50,000 for the first time ever, folks. First time ever. In other words, new car prices are still rising, even though they're way more expensive than what most people can afford. But people are getting loans. People are still taking out loans, folks. The record comes as defaults and repossessions have increased. Right? Where does it end, folks? I mean, do prices ever go down from here? This is just insane, wacky, outrageous. I mean, pick your term here. The average price paid for a new vehicle last month topped 50,000 for the first time. Consumers who can afford a new vehicle are on a buying spree. Well, ones that can get loans anyway. Let's see here. To give us the price, the average new auto loan rate was about 9%. So even with the higher interest rates, prices still aren't coming down. Even used vehicle prices, they started coming down about 2 years ago, but they've leveled off as of late. It means they've stopped dropping. They've been pretty level now for about 6 to 8 months. Not much of a decline, slight dip, but definitely leveled off. And we haven't gotten back to pre-2020 prices, not even close. We're not even halfway back to where we were prior to 2020. So the price rise that we've seen, we haven't even seen a 50% retracement in that recent increase, right? And we've showed the charts here many times. But let's hear from a few people talking about what they're paying for a car. And some people even have their car paid off, so it's not so bad for some. But take a listen to this.
What are you driving? What's your car payment?
I drive a 2020 Corolla and I pay $300.
What are you driving? What's your payment?
I drive a 2022 Toyota Tundra. I pay $625 a month.
What are you driving? What's your car payment?
I got a 2024 Grand Highlander. I pay $1,200 a month.
What are you driving? What's your payment?
Whoa, $1,200 a month, folks. Hang on.
2024 Grand.
2024 Grand Highlander. Am I seeing this correct? I had to rewind it, folks. I almost didn't believe it.
Grand Highlander, I pay
What are you driving? What's your payment?
$1,200 a month, and he works at the
Highlander,
dealership.
I pay
He works at
$1,200
Sparks
a month.
Toyota. Is this Sparks, Nevada?
$1,200 a month.
What are you driving? What's your payment?
I have a 22 4Runner TRD off-road with no car payment paid cash.
No car payment paid
What are you
off,
driving?
baby.
What's your payment?
I have a 2024 Toyota Limited 4Runner and I pay $572 a month.
What are you driving? What's your payment?
I drive a Mercedes and I have no payment because my parents bought me my first car.
His parents bought him a car, but he's still working. I guess that's part of the deal, right? Make your kid work, get a job, and you're going to help him pay for stuff. Seems like good motivation.
What are you driving? What's your payment?
2023 TRD Camry, and it's paid off.
What are you driving? What's your payment?
Crown, Toyota Crown Platinum. It's $590.
$590.
What are you driving? What's your payment?
I drive a TRD Camry. Payments $550 a month.
Wow, was
What do
there
you
anybody with less than a $500 a month car payment? Folks, it's crazy, but people are doing it. And they're working more hours to do it. They're borrowing more money to do it. As you have seen there, as you saw, most people have a loan, right? So it's like, 8 out of 10 people had a loan on their car? Is that the latest statistics here? Let's take a look at this, folks. I want to play you this clip here. And listen to the highest car payment that these people, these car dealer employees have seen. Take a listen.
A customer come in and
What is the highest monthly payment you have ever seen?
I had a customer come in and buy a new Navigator for me. It was $3,700 a month.
What is the highest monthly payment you've ever seen?
20.
Ever seen?
Folks,
I had a customer come in and buy a new Navigator for me. It was $3,700 a month.
Lincoln Navigator, $3,700 a month. On one hand, you're thinking, okay, for somebody to buy a vehicle that expensive, brand new Lincoln Navigator, sounds like, you've got to be pretty rich or pretty well off. But if you're making payments, are you that well off? $3,700 a month. That's a mortgage here in California, $3,700 a month. Wow.
What is the highest monthly payment you've ever seen?
$2,100 a month. I think it was a Bronco Raptor.
What was the highest monthly payment you've ever seen for a vehicle?
I sold someone a BMW M850i,
Oh, no.
and they signed out at $1,875
Okay.
a month. What is the highest monthly
$1,875.
payment that you've ever seen?
Probably it was about 1,600 and something thousand on an F450 Platinum.
What is the highest monthly payment that you have ever seen?
$1,300 on an Expedition.
What's the highest monthly payment that you've ever seen?
$1,400 a month for 72 months.
Wow. 72 months, $1,400 a month. Oh, ouch, folks. Folks, this is what's happening. People are just getting longer loans. They're getting bigger payments. And they're saving less. They're not building long-term wealth. They're not paying off their home. A lot of these people with these big car payments, that's all they have. They don't have a home. They're renting or they're living with their parents still. I'm thinking the kid that his parents bought him a car where he's got no car payment. He probably lives at home. But I think people are doing that to compensate for the fact that they're not building wealth. They're not paying off their home because they don't own a home for the most part. Especially the younger crew, the younger generation. They can't even get into their first home. A starter home is close to $400,000 in most states now, above $350 in most states, nearly half of the states anyway. And people just can't get into it, so they're doing other things. They're taking more vacations because they don't have long-term wealth. They're not saving. People not contributing to 401ks like they used to, not building that retirement nest egg. And this is how people are scraping by. They're trading off saving for tomorrow versus buying expensive things today. And when I say buying, I mean in most cases borrowing the money, not even paying cash, borrowing the money. You saw not very many of these people have their cars paid off. Even people working, looks like at a managerial level at the car dealers, some of them $500, $600, $700 a month car payments, and you would think that that would be a decent job to make more money and not have a car payment. All right, but it does come down to people still able to borrow money. Banks are still giving out loans, even to subprime people. Fitch Ratings reports 6.43% of subprime auto loans in August were at least 60 days past due, in line with the record high of 6.45 that was hit in January. So we're still hovering around the record high delinquencies for subprime auto loans. Delinquency rates for borrowers with the higher credit scores have remained pretty stable. The Consumer Federation of America, a nonprofit advocacy group, last month described U.S. auto financing at a breaking point as Americans owe over $1.66 trillion in debt. So we're at a breaking point, but are we? Because if banks can still keep giving out the loans, then the person that gets their car repossessed, the dealer or the car auction, is just going to have another buyer lined up, someone else to take out a big loan and just buy the car from them. So even though cars are getting repossessed, there's still new buyers. So it's like it's a cycle, right? It's not like people are getting their car repossessed and everybody else is priced out of the market or they can't get a loan. And then the cars just end up increasing inventory on the car dealer lots, on the car lots. We're not seeing that. We're still seeing cars get bought and we're not seeing sales drop. So therefore, you're still going to see prices remain relatively high. And so this is a lot different than what we saw in previous like financial crisis where prices came down. Nobody could get a loan. Banks were really tight on giving out loans. They're tight lending standards. Right now, it's just the opposite. It's still very, very loose lending standards from the bank as far as I can see. That's what I see that's keeping prices propped up. That and people just working their multiple jobs, side hustles, gig economies, working overtime. Let me know down below if you disagree with this, but this is what I see. This is what I think is happening, especially with car prices, but overall with the economy, why the cost of living remains so high. But we've got contradictory thinking out there. We've got the administration out there saying inflation is defeated. And the Fed has cut, even though the Fed has cut rates, yet prices remain too high for many. But they're saying inflation is defeated, folks. I mean, you can't make this stuff up. Inflation, is it defeated if it's still going up? All right. The definition of inflation is higher prices. Otherwise, it would be called deflation. So prices are going higher, but yet inflation is defeated. Tell me how that even makes sense, folks. It's absolute insanity bonkers. All right, and here's how another outlet put it here as far as the auto loan delinquency situation. More Americans falling behind on car payments. Delinquencies surge, but yet prices are still rising. A recent report from J.D. Power shows nearly 14% of new car buyers last month, new cars, had credit scores below 650. The highest level of subprime borrowing in 9 years. So like I said earlier, they're making it easier to borrow money, right? 14% of car buyers had credit scores below 650. So you have subprime people, a lot of subprime people that shouldn't be able to get a new car are doing what? They're buying new cars, even though they're subprime, they have bad credit scores. According to Fitch Ratings, more than 6% of borrowers with subprime auto loans were at least 60 days overdue with their car note, folks. So it just doesn't stop. It seems like no matter how bad it gets, and even if delinquencies set a new record, which looks like they're on pace to do before not too long, they're just going to keep on giving out loans, and you're always going to have new buyers lined up, and it's going to be a never-ending cycle. And therefore, if this stays like this, I'm not saying it will, but if it does stay like this, we're not going to see prices come down anytime soon, folks. That's just the way it works with the math and how markets work and how prices work. There's buyers, prices will remain high. So how do people feel about this? We'll take a look at this. Consumer outlook for household finances falls to the lowest level in over a decade. All right, so we're back to 2015 numbers. University of Michigan's monthly consumer sentiment survey shows households feel glum and concerns about unemployment and inflation. Amid those concerns, and it looks like people are still stocking up. Is that Costco? Yeah, those kind of look like Costco carts, don't they? I haven't been to Costco in a while, but I think they've got those carts where they've got the big upper part there to set your kids or whatever. U.S. consumers have rarely felt worse about their economic futures, according to data released Friday out of U of M. With the index reading of 96, 96 is the worst month since at least July 2011. Wow, that goes back more than 10 years. When the survey resumed asking the question about the 5-year outlook. Overall, consumer sentiment was essentially unchanged from September. It's very clear consumers don't feel like they're thriving. They're scraping by, but not thriving. Prices are still high because people are still borrowing money. Banks are still giving out loans. Combined with people have stopped saving. The savings rate's still close to the lowest it's been. More people not contributing to 401ks, taking money out of their 401ks more often now to help them pay off loans. Debt levels, balance transfers, still continuing. People still walking the tightrope financially to stay above water. Take a listen to this. We've got a tip from somebody here.
If you have a car payment, you should be making your car payment twice a month, at least twice a month. Like your car payment is probably due, like mine's due in like the 12th, I think. So normally I used to just pay my car payment on the due date or a couple days before and call it good. And I'm not doing that anymore. I owe $39,000 on my car loan, which is awful. And I totally understand that. One of my goals in the next 3 years is to get it completely paid off. Really, I'm going to shoot for 2 once I get all my debt paid off. But anyways, why did I make this change? I'm going to now make 2 car payments. We've been making 2 car payments because car loan interest is charged daily, okay? So all I did was take a little gander at my statements, and I realized I was getting charged $11.34 every single day for interest. So when you pay in 2 installments, so you pay half and then pay the other half, you're cutting down on the principal of the loan, I think. Maybe correct me if I'm saying this wrong, wording it wrong. You're cutting down on the principal. Therefore, when you make your next payment, the loan interest that's getting charged every day is going to be less. So make 2 payments instead of 1. And I'm not a lender. I'm not a bank person. I'm literally just somebody that has an expensive car payment.
$39,000 car loan. Ooh, ouch. She's saying that making 2 payments a month lessens or lowers the amount of interest that you pay. Well, paying it towards the principal, that helps. But usually if you pay it towards the principal, it's not going to get deducted from your next payment. They're still going to keep your payment the same and just deduct it from the back end of the loan, which does save you money in the end. The 2 car payment thing, I mean, it may be a good strategy. I mean, let me know what you think down in the comments if that's a good strategy. Coming from someone, though, that's got $39,000 on her car loan, hopefully it's a new car. Hopefully it's still running good. But, folks, that's a lot. I've never had that big of a balance. I've never driven a brand new car. And people think that, because I've done pretty well investing and doing okay financially, that I might drive a brand new car. And actually, it's just the opposite. I mean, even carjackers don't even look at me. If they look at me, they just say, keep going. My paint's faded. I got a 2014 Honda Pilot with faded paint because I park it outside in the driveway and the sun beats down on it pretty much every day. And Honda Pilots typically, Hondas in general, it seems like the paint doesn't last long. I think they're good running cars, but the paint just doesn't last long on them. I see a lot of cars with faded paint, but I'd rather drive something that runs good, that doesn't look so good, versus something that looks great, but doesn't run good. You know what I'm saying? I'll take reliability over flashiness and show offness any day. Is an older vehicle the way to go? One that you could just pay off and not have that payment?
$18,000 to realize no car payment it took me $18,000 to realize no car payment and a cheap car is the way to go. Here's what I'm driving currently, my beautiful 2003 Toyota Corolla with 165,000 miles. And this is the car that cost me about $18,000 over the course of 3 years. I don't know why it's tweaking like this, but it's a 2020 Kia Stinger. I paid $354 a month for 3 years. Mind you, this was my first car I had when I was about 18 years old. It was a Hyundai Sonata. I paid it off and decided to take the money after selling it and put it down on the Kia Stinger. I was working in insurance as a 19-year-old, and they told me, hey man, you're gonna want a car that you can love to drive if you're gonna be driving long distance to your appointments, blah, blah, blah. Basically, they kind of sold me on the concept of wanting a cool car to pull up to my clients' houses with. And that was the last thing I needed as a 19-year-old, to have an excuse to get a fancy car because I was making a little bit more money than people who were my age. So here's what I learned after having the car for 3 years and now getting back into a Corolla at 24. Having the fancy car was cool for about 6 months to a year until I realized I'm paying so much money just to drive this thing, and it doesn't make my life any different. Yeah, girls might be like, dang, you got a nice car, but if you don't have game, you don't have game, whether you got a car or not. The homies loved it, but they also loved the simple, cheap car. So it doesn't really matter if you got...
Don't worry about what the girls think. If the girls like you for the car you're driving, it's the wrong kind of girl. You know what I'm saying?
Real homies, they don't care what you're whipping in. When I first hopped in the Corolla, it was pretty humbling because some people might see it as a beater, but after being in that nice car for 3 years and having roll down windows, it's a little humbling.
No electric windows? Oh, I don't know if I can handle that.
For me, maybe it felt like I needed to be humbled because honestly, now I have more money in my savings. I'm able to invest more money every month, and I can go on vacation or do the things that I want because I don't have to worry about spending and saving almost $400 every month on just driving. I don't see myself needing or wanting a car payment for anything in the near future. So for now, I'll probably just keep buying cars, put putting some money into it and enjoying the fact that I don't have a monthly payment every month. So that's what I learned from spending $18,000 on a brand new vehicle, and I'm happy now.
There we go, folks. He's talking now. He said not having that car payment every month, he has money to invest. He has money to invest. So many people don't have money to invest now. That's one of the reasons I changed up the format on this channel, because I heard from so many people down in comments and direct messages that, hey, JJ, you're talking about investing. I don't have money to invest because everything's so expensive. All right. It turns out a lot of the people, though, that say they don't have money to invest, they still travel. They go to amusement parks. They're going to sporting events. They're spending money on newer cars when they could drive an older beater like the guy we just heard from. So it's interesting, folks. People want to spend money even though they're not really saving. A lot of people don't have money to invest, but they're still buying newer things that they can do without. A perfect example is the car situation. Let me know what you think about this down in the comments. The crazy payments from the car dealership workers, some of them with $500, $600, $700 a month car payments, working at the dealership. A couple people had cars paid off, but that's not very common nowadays. Anyways, hope you guys like this report. Let me know what you think about this down in the comments. Hope to see you in the next video. Keep stacking. Bye for now, everybody. Peace.